Hey everyone, so we're back to basic attention token again, and we're looking at the 3-hour chart. Let's go with all of the time frames from the daily all the way down to some of the lower time frames. So this is a pause in an uptrend that looks like it could be channeling down, and the moving average might act as resistance. Just as a trading principle, when price closes below and consistently trades below moving average, there's a change in trend. And on the 3-hour chart, there's a lot of indecision still. So on the daily, we have more of a reattempt at wiping out some of the losses that occurred on June 6th. So even though I'm recording this video on June 6th, this is the candle for June 6th, this is the candle for June 7th. So it's still a bearish setup if it doesn't really go past half. And now it's at about half, but let's see what happens. So this 3-hour chart shows that it's still stuck in the mud, and 2360 was the point of support. This 2-hour, we're seeing just a follow through of the prior candles excitement going into 2406. Now the moving average is at 2420. On 60 minutes, it looks like it's just ready to tag it very soon. So it's not even a penny away. That could mean that we're getting close to it. So since these are 45-minute candles right here, they're kind of irrelevant. But what they could indicate, even on a time frame like this, is that this base right here is more of a false bottom, that we had all of these attempts at clawing through some of these support points and the structure that was holding it up. We finally have that final blast down, but it's starting to reattempt at a rally. I think some of the altcoins are just following the beat of their own drummer. They're not necessarily tied to Bitcoin as much. And so if they have an independent rally, it could just be based on this token being used more. And there could be more people that are coming onto the platform. And so for right now, we're just in wait and see. We're going to be going over a candlestick chart of the CRO token, Crypto.com. So this has just been on a tear since March. So it's interesting because Crypto.com is following the track of Bitcoin here. And it's also following some of the elements of Bitcoin's rise, but this has more to do with maybe staking and the underlying demand. There is no sign of letting up right now, and I'm not seeing so much indecision that will cause us to believe that there's a reversal in the works yet. But let's take a look at prior reversals to see how badly does this thing need to go down before people get concerned. The case of the coronavirus back in February into March, we have a equally sized real body on the red side causing a trend change into red, and then some accelerating white candles into overall downtrend. Several closes below the moving averages and bottoms that don't really exist yet. So I could see why some of the higher momentum candles would occur at the end of a downtrend, but we don't even have one yet. So there's no reason to think this is going to just keel over yet. It would have to be at a point of maximum excitement, and maybe some of the bears are going to argue that this is their maximum point of excitement, and then just some stalling before a complete flush down. So we need to see that kind of 3-step sequence. But it's hard to really hold on to a rally that has lasted this long with hardly any interruption. There was only one losing day, and even that was just more of a truce. So this asset went to 3 cents, from 3 cents, all the way up to 10. So if we pull this out and look at a candlestick chart, this is the most time we have. And I'm willing to make the argument that this is more of one of the stable rallies. So we have a couple blow-off tops. We have a blow-off top on Sunday, March 3rd, 2019, last year. And then we had another one late in July where there was a massive blow-off top at 15. Majority of this is just one huge candle wick leading to several months of declines, which is what you can see, which is what you should see from a candle that is that bearish. I think we'll see some of these patterns where these are almost like Legos and they just become building blocks to sustain the rally. So if past is any precedent, we're headed to 15 just on the basis of us clearing through this range. So we have a high of 8 cents here, and 10 cents is no longer an obstacle. So we should buy pullbacks. So demand is surging, and in 1 year, this coin returned 60%. So when prior resistance becomes support, we have a price target of 7 cents, 7.8, and right here, a high of 6.2 cents. I could see why it would drop that much just on taking air out of the bubble, so to speak, but it looks like smooth sailing.